Hello everyone, my name is Moe and welcome to the second video of Income Investors. Before going into any details, understand that the opinions you hear in this video are just that, opinion. These videos are for informational and educational purposes only, and nothing you see here is investment advice. Understand that investing involves risk, and no matter how safe an investment sounds, there are risks involved. So take some time and read the warnings about investing below. And let's get right into it. Hey, John, how's it going?
Excellent, Mo. How are you doing?
I'm good, good. I'll share a little bit of story about, I met a friend recently, and he was talking about he wants to invest like Warren Buffett, right? And in other words, essentially wants to invest with the people who know how to invest and didn't really have any idea. And this brought up this company that you had profiled recently at incomeinvestors.com. And I thought we'd talk about it today.
Yeah, absolutely. I think most investors are excited to invest in Warren Buffett because he's one of the most storied investors of the 20th century.
Right.
But you have to pay for that privilege.
Right.
Like one share of Berkshire Hathaway is close to $460,000 or something.
Right.
And he doesn't pay a dividend. So
Yeah.
you're only getting capital appreciation, which might be good over the long run, but there's going to be blips where there's very little.
Yeah.
Gain.
And if I'm not mistaken, I think if you look at Warren Buffett's performance over the long term, he's essentially following the S&P 500 and not getting any dividends.
No. And that's the fun thing about Buffett is he doesn't give a dividend because he says, let my share price speaks for itself, which it does over the long run. But on the other hand, his biggest holdings are big dividends companies. So he don't give a dividend, but he collects about over $6 billion a year in dividends himself.
Right.
In fact, he calls dividend stocks the secret sauce.
Right. But doesn't pay his investors.
No. And so you'd be better off buying, an S&P 500 index.
Yeah.
Which is going to follow Buffett.
Right.
And also get a tiny dividend.
Little bit of dividend as well.
Yeah. But there's a better option right now in this market, and that's Icahn Enterprises.
Yeah. Tell us a little bit more about what is it all about and, which big investor you're essentially investing with.
Well, you're investing with Carl Icahn. He's the majority owner of the Diversified Holding Company. He has like an 85.5% stake in the $18 billion firm, and his portion is $15.2 billion. So he's pretty heavily invested.
His skin in the game, you would say.
Yeah, exactly. So it's sort of like Berkshire, but much, much smaller.
Right.
But he is engaged in seven operating segments: investments, energy, automotive, real estate, food packaging, home furnishings, and pharma.
Right.
And I think a lot of people are familiar with the companies that he has invested with in the past and the brands he owns now. He's an early investor.
Yeah. Do you mind mentioning some of the companies that he has invested in, or he's invested in, or some companies that he's exited? Because he's known to do that as well. He goes into companies. Activist investment is his thing. He goes in, buys, increases the value, and gets out. So if you want to share some examples of what he owns now and what he has done in the past.
Yeah, he was an early investor in Apple, Motorola, eBay.
Wow.
And he's since exited all those. And his current largest holdings are First Energy Corp, Xerox, and SunWest Gas Holdings.
Okay.
But his other holdings are CVR Energy, Amco, Pep Boys, and Precision Auto Care. So I think most people are familiar with seeing those signs on the streets when they drive by.
Right.
And like you said, he knows when to get in, he knows when to hold, and he knows when to get out. So over the last few years, he's made some pretty significant exits with banking a lot of money. 2021, he sold PSC Metals for $323 million.
Okay.
In 2019, he sold Ferrous Resources for approximately $550 million.
That's impressive.
In 2018, he sold Federal Mogul for $5.1 billion.
Wow.
He sold Tropicana for $1.5 billion. and American Railcar Industries for 1.75 billion.
Yeah. So he's seasoned. I mean, he's got a great track record. If if you're looking for a track record, there's a track record here.
Yeah, he has a great history, but because he's Carl Icahn and not Warren Buffett, he just doesn't get the credit.
Right.
Or his company doesn't get the credit it should. And again, even during the pandemic and now, his financial results are solid.
Right. And how are the financials looking now? Let's dig into that. Like how is his current performance? And go ahead.
Oh, it's pretty stellar. Like when you compare it to everything else, like the broader markets and everything. For example, for the fourth quarter, revenues increased 34% year over year to 3.1 billion.
Impressive. Yeah.
EBITDA loss improved significantly to 54 million. Full year net revenue increased 24% to 13.3 billion.
Yeah.
And adjusted EBITDA came in at 758 million.
Okay.
Compared to 273 million for 2021.
Right. And
more than double.
And we also have to keep in mind this is an environment where 2020, if you look at it, was a horrible year on the public markets, and across the board, you had major indices falling, values going down the drain, and he was still able to generate some decent revenue and like decent numbers. That's good, yeah. And on to our favorite topic, dividends. How does it? What's happening here? Because I mean, earlier we were talking about if you own Berkshire Hathaway, good luck getting a dividend. But here,
no luck there.
Yeah, I think in Berkshire it's pretty much mandated that you're never going to get a dividend. I think the only thing you're going to get is a invitation to the shareholders party that happens once a year.
And then once you get there, you spend all your money on C's candy.
Yeah, but with IEP, what are dividends like, and how are you getting paid okay? What's the dividend yield? How many quarterly dividends? What kind of dividend track record there is at IEP?
Oh, they're great. It's as reliable as you can get. They pay a quarterly dividend of $2 per share or $8 on an annual basis, and that's like a eye-watering yield of 15.8%.
Wow, good luck getting that anywhere else. And I mean, this is beating inflation like by a large margin.
Yeah. And there are some stocks that have like yields of 30%, but it's because their share prices have fallen 98.
Right. Yeah, and
inversely to the value of the share. So, but Icahn, it gives a reliable dividend.
Yeah.
And the share price is bullish. And this past January, its payment was the 71st consecutive dividend payment since 2005.
Wow.
And over that time, it's increased its dividend numerous times. It doesn't do it every year, but it's done it numerous times. Most recently was in 2019 when it boosted it from $1.75 per unit to $2.
That's impressive because, again, if you go back since 2005, we saw a housing crash, stock market crash, bunch of bunch of issues around interest rate, a pandemic, and he was still able to contain keep paying these dividends. That's really impressive. And
some people might wonder, like in 2021, the company reported a net loss of 183 million. So people might be wondering, how can Carl Icahn continue paying such a frothy dividend when they're losing money?
Right.
What's important to know about this company is that they pay their distributions from cash in their investment fund.
I see.
Which they can access daily whenever they want. And it currently stands at 4.18 billion.
Oh, that's okay.
So I know there's some people that say because they have a net loss, there should be some concern whether they can maintain this dividend, but they've maintained it for 71 quarters.
Right. And they must be doing something right at this point.
Yeah. Oh, for sure. And they're doing a lot more right, I think, than, a lot of people may not agree, but Berkshire Hathaway is doing.
Yeah. You can if you were doing some I guess if you could call it like funny business, it would catch on to you in 71 quarters easily.
Yeah.
that's a long
no, he's not like fudging it or anything, or no, not at all. No, and it's reflected in the share price. If people didn't believe it,
right,
they'd be like, avoiding the stock like the plague, but they're not. It's the complete opposite.
Yeah.
It's trading near record levels. It's up 4.6% year to date, 15.2% year over year.
Wow. And the dividend yield hasn't gone up because the stock price has gone down, which is usually that's what you see.
Like in spite of being at record levels, it's at 15.8%. That's spectacular.
Right.
Yeah. Then again, Berkshire doesn't do that.
Yeah.
And Berkshire's share price is down 2.6% year to date and down 12% year over year.
Right.
So you're in the red and you don't get a dividend.
Yeah.
You get the privilege of saying, I own Berkshire Hathaway.
Yeah.
And then, sorry, just one more point. Like, it's even more monumental over the last 20 years, the share price growth.
For IEP, how much has it grown?
With dividends reinvested, IEP has returned 1,868%.
Wow. So you would have beaten S&P 500 with it, I think?
No, absolutely. Yeah. Over the last 20 years, though, I know Berkshire returned 560%, which is solid.
Yeah.
But it's still 200% less than what Icahn did. And meanwhile, over the last 5 years, it's returned 77%.
Right.
Berkshire over the same time frame did 57%. And since the start of 22, it's returned 24%. Berkshire is up a less, enthralling 0.64%.
Oh, wow. That's a
so you're basically flat. You've done nothing in 2 years and you don't get any dividends.
Yeah.
Carl Icahn, you're still getting 15.8% dividend, and the share price is up. What did I say? 24%. So there's just no comparison.
Yeah, that's impressive returns. Yeah.
And it doesn't mean it'll always be like that, but right now, there's no comparison.
Makes sense. All right, John, I think this is it for today. And we'll come back again. For our viewers, thank you so much for joining us today. If you could do us a small favor, go ahead and subscribe and like our videos. Thank you so much, and we'll see you soon.